You ready?
I'm ready.
All right. Good afternoon, everyone, and welcome back to TBD Micro, your Colorado Springs real estate podcast. I'm Rob Thompson, associate broker here at the agency in Colorado Springs, and I'm joined again by my buddy Troy.
Hello, how are you?
All right. How's it going, man?
Doing really well. It's been a really busy week since the last time we've seen each other, and blessed every day, man.
Right on. Well, we're here today. We're going to talk about the purchase process and what that means. I'm a realtor, as you guys know, and you're a lender, and so Troy's got this awesome PowerPoint flow chart built out, and we're just going to talk about how to buy a house, right?
That's exactly correct. You know, as a prior military guy, we wouldn't be who we are without process flow and checklists and all that. So, I'm really excited to kind of just break down in the layman's terms exactly what you need to do from beginning to end and get that squared away for you.
All right, let's knock it out.
All right.
So a person, they ring me up. I'm the realtor. They ring you up first. Lender. Oh, let's ask that first. Who should they call first?
Always the lender. And the reason why is because for me personally, my relationships, I don't want them to putting people in cars not knowing what they can do, if they can do anything at all. And so that extra time and that extra effort just to make sure that they're ready to go is just a courtesy that I do. And also it helps the individual because, boy, you don't want their hopes to get up if they can't do anything on the front end. Maybe they need a little bit of time or some credit, that kind of thing. So it's always good to call the lender.
Right on. As a realtor, I have a little different perspective on that, and that's okay. If they call the lender first, then they won't necessarily end up with that particular realtor. So as a realtor, I'd say call me first, and I'll put you in contact with Troy, and I'll ask you to let me know that let Troy know that I'm the one who sent you.
Well, allow me to retort. I will say that what I always do is say, hey, how did you hear of me? And then they say, Rob Thompson asked me to give you a call, and that's how I tie that together. And I wouldn't be lying to say, well, Rob's an amazing realtor. You need to stick with that guy. So.
No, well, thanks, man. Likewise. Okay, so they call you or me first, and then one way or another, we're going to have this following conversation with them, actually. Generally speaking, when I get contacted, folks will ask me, hey, how do I buy a house? And I'll talk them through the 50,000-foot view of the process, and I'll tell them the next step is to get in touch with a lender, so to get pre-qualified or pre-approved. So let's talk about that. So we talk about the process. Hey, here's how you buy a home here. Next step, or rather concurrent step, is talk to a lender. Why do they need to call you?
Well, the reason why is because there are probably 3,000 different things that can go wrong in purchasing a home, and we really want to make sure that they have the best opportunity and to fit into the best financing option for them. So, talking with us is one thing. So we kind of go through income, employment, assets, and credit. Those are the big four pieces that we always talk about. And depending upon their situation currently, we go through a lot of questions. It takes about 15 or 20 minutes normally. And then what we do after that is we prove what we talked about through documentation. So I send an email to them with a secure link to provide those documents and analyze those to make sure there aren't any secondary questions. So they're absolutely pre-qualified / pre-approved. The difference basically is pre-qualification means we haven't looked at documents. Pre-approval means we've actually analyzed those documents and feel extremely confident in being able to do the financing. Okay,
so they ring me up, step one, or they ring you up, step one, get in contact with either of us. One thing that we can do if you call the agent at the same time is I'll often tell folks, well, if you tell me what you're looking for, I'll tell you what the market has. So say you're looking for $250,000, 3+ bedrooms with a backyard. I can filter that down. I'll send you those results so that you get a sense of the market before you go shopping. I don't want to get people's hopes up, though, and so I'll often tell them before we can open a door, I do need you to get pre-qualified or pre-approved, and then we tag in and you go through that process you just talked about.
Absolutely. It's a symbiotic relationship where we're actually communicating together to help those individuals looking for that home.
Right. So they get pre-approved. We go shopping. We go start opening some doors. They find the house that they love. What is our next step?
So once they find the house that they love, what I always like is either the individual, but preferably the realtor, to text me, email me, call me with the house and whether there's any homeowners association. I got to factor that in. And I vet the house out because sometimes they get in love with a home and maybe it's a condominium and they're doing a VA loan and it's not approved by the VA, or it's a manufactured home and my numbers change as far as interest rates. So it's really a great idea to vet that home out before we put an offer in.
Makes sense. Yeah, that can really. A good agent will know that before walking in the home. Will factor in those things, but those are all factors that can change. Interest rate definitely changes the pricing, insurance, all those things change based on the type of house. Looking at your flow chart here, there's actually I went a little fast. Back up. You contact the lender, discuss financing options. What does that mean?
Sure, and we touched it a little bit on our previous podcast, but we want to make sure that the right financing is in place for them, their specific needs. For instance, a veteran, by and large, usually gets a VA loan, but there are times when other financing options, conventional or FHA, will be required, and so we want to make sure that we have the right product and the right estimated monthly payment and ability to lend. So we go through all of the options based upon their complete file so they can feel confident in how to move forward.
Okay. So they contact you, you discuss financing options, they get pre-approved, pre-qualified or pre-approved. Then we go shopping, find that home. We vet it through you first, time permitting. I'll add that caveat as an agent. Sometimes you take your best swing at the house. As an agent, for example, if I'm looking, by experience now, I know, for most parts of town, if I'm in a condominium, I know that we're not going to make an offer, FHA or VA, unless I can demonstrate, or unless I know first, or the listing agent, I'll check, is it 50% occupied, for example.
Exactly.
So we'll take our best swing at the house. Always, as a rule of thumb and a practice, I would absolutely agree with you. You should always vet the house through the lender before you make that offer. However, sometimes you got to get that offer in. Okay, so we find the home. Negotiate an offer.
Right, negotiate the offer, and I send that pre-approval letter over specific to that home and that offer. And the reason why is because there's a potential a lot of times where a client can absolutely afford more, but really the seller and the seller's agent does not need to know that. So I make sure that pre-approval letter is specific to the offer for negotiating purposes for our client. So,
and from the realtor perspective, on the one hand, we all know that those letters are worth the electrons they're printed on. And that there's a game afoot in terms of they generally, 99.8% of the time they match the purchase price of the property, which is amazing because if my property is listed for $237,500, happens to be they're only pre-qualified to $237,500. On the other hand, there is a strategic piece to that. You maybe don't want to tip your hand that there can go up to $300.
That's correct. And what I also do with the realtor's permission is I actually call on my cell phone the listing agent to express the strength of the file. I don't talk specifics because that would be against protocol for sure, but I talk to them about the fact that I've scrutinized income, employment, assets, and credit, and that I feel extremely confident in the offer that has been put forth. So
that does help. Sometimes the highest offer is not always the winningest offer, or isn't always the offer that wins. A good example of that is you might have a cash offer, right? But cash might be lower than the conventional offer, who then might win. Lots of circumstances, a pre-approval will outweigh a pre-qualification, and so having the lender call is definitely a pro. Cool. Okay, so we go. So you know what? They accept our offer. We're under contract. What's next?
So at this point, we've vetted out a lot of the pre-approval documents. Now we need to supplement those documents with a few other things, identification, those types of things, and then we schedule a no-kidding appointment with the client to actually get the mortgage application in place, sign that mortgage application to start the underwriting process. So I prefer to meet up with individuals. I think it's really important to do that. I like that connection with an individual. I learn more about them and what they're looking for. But I have the ability to do online applications as well if that's something that they want to do. We just need signed documents to get in front of an underwriter. I will say this, a lot of times what I'm doing is it's actually underwritten before the offer period. I get them underwritten, that way they can bolster their chances of getting that home. But if that hadn't happened yet because of the speed of the market, then this is the time for the application process.
Okay, so concurrent to that, we're also scheduling a home inspection. Do you want to know about the home inspection as a lender?
100% of the time. And this is the reason why, is because what I like to do is we're trying to close quickly I like to order the appraisal at the appropriate time. I want to make sure that I'm not ordering it too early to allow the inspection process to happen, but I want to lean forward a little bit to order it a few days early to allow that inspection to come in and work through any resolution items. And I also call the listing agent and I just say, hey, I'm ordering the appraisal. Please make sure the resolution is complete before the appraiser goes out there. So we're just communicating like that.
We're strategically aligned there. One thing I'll tell my folks often all the time actually is we don't want the appraiser to step foot in the door before the resolution is complete. That tips your hand to the seller as a buyer's agent. You know, it tells the seller you're already invested in the property, and that could be used against you in the negotiation piece. So home inspection comes down, and what we're talking about there is out of the home inspection, the buyer has the right here in Colorado Springs or in Colorado to do what's called an inspection objection, unless that right has been waived as part of the purchase. But generally speaking, it's a right. So you do this thing called inspection objection. Say there's 3 things you want fixed in the home. You as the buyer on this objection would say, I, the buyer, require you, the seller, to fix X, Y, and Z. Now, it's important to know that the seller doesn't have to do anything, not in this phase. They could say, nope, market's hot, market's nuclear hot, I'm not doing nothing. You don't have to buy the house, though. From the real estate side, you have that right to walk away from the purchase if you don't get what you want in that objection in the form of the resolution, where the resolution is the seller says, I'm going to do Y, but not X or Z. If you accept that resolution, the contract proceeds on to appraisal. But so you do, just so you know, you do have that right not to. So home inspection, though, so it goes good. We do X and Y and Z. The seller agrees to X and Y. Buyer's fine with that. We lock down the resolution. Appraiser steps foot in the door. What's next?
Sure. The appraiser comes in, and they've done a lot of homework beforehand. They have comparables in the area. Really, when they're at the home, it's 95% complete, the appraisal is. So they're checking square footage. They're making sure there's no safety or structural issues on the home. Quick little dovetail here. Really, the inspection is more for the buyer. The appraisal is more for the lender. It is for the buyer as well, but we're using the home as collateral to lend. So that appraisal, 1, make sure that the value is there, and 2, make sure there's no issues, again, structurally or safety wise, to feel confident enough that we can lend hundreds of thousands of dollars to this individual. So the appraisal happens, it gets delivered to us, and then we send it to the buyer so they can see it. It's theirs. It's not the seller's or the agent's. It is theirs. They paid for it. And then they have to sign a document saying that they got it per guidelines. But as long as it comes back clean, then we're fine from a financing standpoint. If it comes back either undervalued or with some repairs, then we have to negotiate / work through those items to continue on with the process. That's where agents get together as well with their clients to see what they can do to resolve that appraisal issue.
Yep. And so on the inspection, I mentioned that the seller doesn't have to do anything, but the buyer doesn't have to buy. The appraisal is a little different. If the seller wants to sell the house to that buyer, and the appraisal comes back with any subject to conditions, an appraiser might come back and say there's a broken window or broken screens on a VA loan. The appraiser might come back and say, yea, verily, the value of this house is $250,000, subject to the repair of the window screens. In that instance, the seller must fix those screens to sell the house.
To that individual, that's correct.
Individual, right, yep. Now, that said, there are some variations there. One time, I tore down a deck for a seller, and I was the buyer's agent, or not a deck, a shed, one time for a transaction. The seller said, I'm not doing nothing more, and I'm not paying for anything more. And so we were like, So I said to the seller's agent, what if I tore down the shed? Because they don't. And the seller's agent said, I'll ask. And so they said, yep, the seller said you can tear down their shed. I said, please send that to me in writing so that I can go tear the shed down. And they did, and we closed. But
that's awesome. Those are the kind of things that realtors do, good realtors. And, as long as you didn't need the value of the outbuilding, right? Then you just move forward.
Right. And we clarified with the appraiser beforehand. I said, because the appraiser said, you can paint it or you can tear it down. We said, well, we'll tear it. Let me tell you, man, that was one of the sturdiest sheds I've ever built, I've ever seen. I took a swing at it with a sledgehammer, and it was like, the shed was, like Thor. Sledgehammer stopped, and it didn't go anywhere. Anyhow, so appraisal comes down. Say the appraisal is at value. So we had a good inspection. We got a good appraisal, no conditions. From the agent's perspective, now we're just waiting for closing. but you have several steps outlined here.
Right, and there's some concurrent stuff that's going on. So once we get under contract, we're ordering title. So we call the title agency that is responsible for that closing, find out who the title closer is, get some documents that are required. The appraisal's going on at the same time. And we're also, if we didn't underwrite without a property, we're also getting those documents to the underwriter. And we're going to get an underwriting decision, usually 24 to 72 business hours after turn-in. And then that process comes back and a decision is made by the underwriter. So the underwriter normally states, if I'm worth my salt, it's conditionally approved, okay? They've analyzed everything and everything looks good. There's usually 2 or 3 items that the underwriter needs in order to give what's called a clear to close, one of them being the appraisal. So if we're concurrently, underwriting and doing the appraisal process, a lot of times the appraisal is not in by the time we get an underwriting decision, so we just have to wait for that to come in. But if it all happens and the stars align, then we get that underwriting decision. We might need something from the title company because there's something going on. They might need something from the appraiser or from the buyer or an amendment, usually some small stuff like that to I dot and T cross for the underwriter to get that clear to close designation from them.
Okay. So we're working these processes pretty much concurrently. We to kind of recap, they made contact. Maybe they made contact with me first. I sent them out some options that are meeting their general criteria. But I say, hey, before we go shopping, we need to get you pre-approved or pre-qualified. Send them on your way, or vice versa. They get pre-qual, or they talk to you. They talk about their financing options. They decide on the loan path that's best for them. We go find a home. We negotiate the offer. Where we get it accepted or countered and accepted, once that's done, let's talk about one step here, earnest money.
Sure.
We missed a step, but part of the process here, once you make an offer and it's accepted, generally within 72 to 96 hours, you're required to tender earnest money per the contract for a property. That's also known as good faith money. Generally speaking, that money is returnable. I think we talked about this last week, but it is money that's due too. So earnest money is tendered. Then we have the home inspected and appraised. All the while, they're working on all those steps with you to get underwritten. Then we get to clear to close. Between clear to close and handing the keys, what other steps are there?
Sure. Once we get a clear to close, I would say 90% of everything is done. However, there might be some, even though we have a clear to close, which means they will send closing documents to the title company, there could be some prior to funding conditions, so we take a look at that. And if that's the case, they're usually minor, again, a signature of a gift letter or something like that at closing. But we analyze that to make sure there's nothing there. A closing disclosure starts. So what that is it is the final number. So everything is really an estimate stage, and it gets whittled down and gets closer and closer as far as monthly payment, the cash / cashier's check that might be required at closing. Now that we have a clear to close, we can, no kidding, start working with balancing numbers with the title company and our closing department. And we communicate that to the client, and they have to sign it saying, here's what you really have to bring in. And that has to be signed, that closing disclosure, 3 business days before close. So they have, and I go through that with them, make sure there's no questions on that. So that's really the next big step. But what we also do is we start scheduling the closing with the title company to make sure everybody's aware of the who, what, when, where, and why of the closing. And we send an email out to all the parties to make sure that they know when that's happening. And what kind of things do you need to bring? Driver's license, cashier's check. Was there a power of attorney that was done? Do you need to bring that with you? Those kind of issues. Is it going to be a mail out? Is someone not going to be in the state or able to go to the closing? So we need to make sure that all the logistics after the clear to close happen smoothly.
Can the buyer go buy a car?
Please no. Don't ever do that. In fact, I had someone text me 3 days before close. They were coming from Italy, and it's just luckily we have this conversation way ahead of time. Please don't do any of this stuff. So if you want to do something, give me a call, and they did, which was amazing. They say, well, I'm landing here, and I need to buy a car. And I said, well, no, please rent a car for a couple weeks until we close. And because they are doing soft pulls on credit, and there's something called the UDM hit. I won't bore you with the details, but they have access to people that are getting inquiries on their credit, and they will ask that question, and I will need to answer, well, they got a new car, and if a monthly payment changes the numbers, you could be homeless. So don't do that, please.
True story. Okay, what about this one? What if, man, I just really hate my job, and I've just been waiting for that clear to close to quit my job. Can I quit?
No. So basically, if you think at the beginning of the process, right, we analyzed income, employment, assets, and credit. If any of that stuff changes, it could totally unravel the purchase process. So that's why we're so kind of maniacal, to be honest with you, about making sure that we're communicating and that you don't do any of that stuff. Don't get any new inquiries. Don't co-sign for anybody. Don't buy furniture ahead of time on a credit card, because guess what? Now that credit card has a higher balance, that means a higher monthly payment changes our numbers. So there's very, very specific reasons why we do things. There's a million things, as I mentioned before, that can go wrong, and I'm just trying to hedge from that kind of stuff. I really want you to get the house.
There you go. So don't do anything. With what I usually say is do nothing that's outside your normal pattern that you haven't already discussed with your lender while we're undergoing this process, and wait until you have keys in hand to buy that furniture, to buy that vehicle, to change jobs. And so, yeah,
we've even talked about, I love these people when they do this. Oh, I need to get cable when they want to run my credit, and those kind of things. That's fine. We can explain that because there is no new credit being established. They're just checking things. But I love it when they have that much thought process to give me a call to make sure it's okay. And that's really what you need to have in order to go through the buying process. It's better to ask and not have to worry about it than to not ask and have something turn sideways on you.
Much better, because in the end you could end up homeless, and if it's at that far down the process, you're likely past all of your protections for that earnest money too. So not only could you end up homeless, you might end up losing your earnest money as well, which could be $500 to $3,000 in this market.
Yeah, I mean, what I would assume, a 1% or $3,000 on a $300,000 home is pretty standard these days.
Good question. So, not to introduce a new topic near the end of the podcast, but there's two schools of thought, in my opinion, on that. One is 1%, right? That's a pretty standard number. The other thought, it says that earnest money is so ridiculously easy to get back for a buyer because it's a heavily buyer protected state. As long as you're acting in good faith, that it might as well be $1 for the number of instances that a seller actually gets that earnest money. Now, there are agents that might listen to this and vehemently disagree with me, and that's okay. Generally speaking, you see anywhere between used to be $500 to 1%, $500 to 1%. Now more so, it's $1,000 to 1%, because that is actually one thing that you have going for that amount of earnest money is right or wrong. It is an indicator of financial solvency.
That's correct.
So that does help. Okay, well, that's the process. How do they get a hold of you, Troy, if they want to get pre-qualified?
Sure. So, again, you can just give me a call directly on my cell phone. My cell phone number is 719-205-0413. Again, that's 719-205-0413. If for some reason I'm not available, I will definitely give you a call back at my earliest convenience. I do have a VIP line where my loan partner can help out as well. You just call 719-749-7061. Lucretia will be happy to take your application down. I will take a look at the information as quickly as possible, because I know how this market is, and we'll get you taken care of, I promise.
And if you're looking for a home or you want to know what's on the market, give me a call at 719-440-6626. Forgot my own phone number for a second. It's a long day, need more coffee. Okay, and that's all I got for you. Is there anything, any last attacks?
Well, I mean, you usually ask me what a good book recommendation is.
Oh, man, totally. Definitely need extra coffee. What's a good book recommendation?
I've read it before, and what I like about it is it shows applicability now just as much as it was 200 years ago. It's Lincoln on Leadership.
Okay.
I love that book. It talks about really... I like to study leadership, being in the military for 20 years. By no means have I conquered it, so I keep reading to try to figure it out. It's a great book, really easy read, but kind of get a peek behind the curtain of how a president ran a nation, I think is really cool, and there's some bits and pieces that we can definitely learn. So Lincoln on Leadership would be one that I read.
I just started one called The Net and the Butterfly, and it's about thought processes. And just getting into it, but it really was interesting. It talked about how Edison used to he'd fall asleep in his chair, but he had a handful of marbles in his hand when he'd fall asleep. And his process for coming up with breakthrough ideas was he'd fall asleep in his chair with the marbles in his hand, and then letting his subconscious do some work, right? And then but the marbles would fall, the clatter would wake him up, and he always had a notebook right there, and he would write down whatever he was thinking about in the moment that he woke up. In that second, and it might sound bizarre. I could tell by the look on your face, you think it's kind of odd, but it was how he and a couple other famous inventors came up with some of their breakthrough ideas. Was they would let themselves fall asleep in that manner, let their subconscious do a little work, and then snap.
No, I wouldn't say that's odd at all. I just because I know that when you wake up, that is when you're most lucid, and you want to be able to remember those thoughts. I think that's amazing. That's cool.
Okay, right on. Well, okay, that wraps it up for today, and we'll be back in touch next week with another topic.
Love it, man. Let's do it again.
Sounds good.